finding and talking about support and resistance. Now, there are a couple things I need to help you out now so that you have them covered for the webinar. I'm popping up a link on your screen. Tonight, I've got a couple presentations, short little presentations I'm going to share with you in the webinar. If you want to see these presentations again, just use that link you use that I popped up on your screen, and then go for the playlist for support and resistance. Also, you'll notice on your screen, there are 2 handouts that you can download. I put together this guide and handout on support and resistance so that everything we talk about in tonight's class you have in notes, and you can follow along in the guide and use it at your leisure. I've also included a very elaborate ebook from investing.com on introduction to technical analysis, because that's the field that support and resistance fall on, and it'll explain to you all the different ways to get support and resistance and how to use everything that falls into the field of technical analysis. Now, one of the basics that no matter how you want to trade, no matter what style you're trading, what strategy you're using, what asset you're trading, you need to understand support and resistance. Okay, it is a fairly simple concept, but it confuses a lot of people. So basically, when discussing it in the context of the stock market or the Forex market or the financial markets, it defines the level at which buyers and sellers step into the market and where the law of supply and demand comes into play. Imbalance in supply and demand creates support and resistance levels. For example, when an overwhelmingly high number of buyers step into the market, an indication of support is being put into the market. Conversely, a large number of sellers indicates that there's overhead resistance preventing the asset from moving higher. Now, that's a lot of words that sound a little bit complicated. Basically, support and resistance are important levels in the price movement of an asset. Not the price movement today, it's on historic charts. Where in the past have buyers and sellers had a problem pushing the asset? If the asset was lower and they were pushing it up, at what price level were they able to push it up for before it bounces back? Where did they stop and consolidate and think about it a little bit? Because if you could see, say, for instance, we know gold is trading above 1,200. We know that 1,200 is a very important level for gold. So it's a support level, because anytime gold is falling down, as it gets close to that 1,200 level, it's going to bounce back and turn back up. It has a very difficult time going below it. Also, we know 1,250 is a very important resistance level in the market we're looking at now, that we're currently, whenever gold gets up to 1,250, it seems to get stuck and eases back down. So we know these as support and resistance levels. So this makes it very important for you to understand no matter how you're trading or what you're trading. So there's many different ways, though, to achieve or get these support and resistance levels. They come from what I call eyeballing, which is my favorite. And that is looking at a chart and looking at a historical chart and going back in price to see where price got stuck. See where the swing highs and the swing lows were of price movement. Short term, long term, you can go back 6 months, a year, 2 years, 3 years. Say, for instance, you're looking at a stock, and every time that it gets near 37.50, it bounces off of it. It can't get there. No matter what happens in the news, no matter what rally it happens, it just gets stuck at 37.50. So if you own that stock and you had invested in it or traded in it, you would consider selling when it got near 37.50. You would not consider buying that stock when it was near the 37.50 level, because historically it has had a hard time getting through that level. Now, support and resistance represent key junctures where the forces of supply and demand meet. In the financial market, prices are driven by excessive supply or demand. Okay. Now, we all know that price doesn't move straight up. Price pushes up, eases back down, pushes up, eases back down, pushes up, eases back down, pushes up, eases back down when it's moving in a trend. Okay. If you want to define where these possible levels might go as it's pushing up and easing back down, okay, you can look historically to see how it has done this in the past when the stock has rallied at that price. Because we're only concerned with what it did at this price when it was at this price before. Now, there are other oscillators and indicators like Fibonacci levels, okay, that help us see support and resistance. We have trend lines that give us support and resistance. We also have moving averages that will help us give us support and resistance level. So you can use multiple levels or single levels to find us. So let me pop up a live chart here for you, and then I'm going to share with you a little presentation. But if you look at this, is my standard teaching chart. Hold on one second. Let me just get my marker off of here. There we go. Okay, this is my standard teaching chart. Now, the blue lines that you see coming across there are support and resistance levels or price levels at which the euro US dollar, when it was last trading at this level, had a difficult time going through. Now, we can see on this top level here, and this, I found these by eyeballing, by looking back over price. Look at how significantly important this price has been to this asset in the most current period. Look at what happened back here. Every time price came down near there, it couldn't fall below it. But look at when we go back even farther, how when price was rallying up, it had a difficult time getting through there. So we see that this is a price, no matter going up or down, that buyers hemmed and hawed. And we want to go back as far as again, because the more important this price held in the past, the more valuable it is for us today. We can see the next level, and you have many support and resistance levels. And once you've drawn them on your chart, they stay good going forward forever. But they're only valid when the price is trading near that range. So this level up top that we have highlighted in yellow doesn't really help us right now because the euro is all the way down here. So this is still a resistance level or support level. Now, resistance is when price is moving up and bounces off of there. It's resistance. When price is falling down and it holds price up, that's support. Okay. So imagine support and resistance are like an elevator. When you're in an elevator, the floor below your feet is your support level. When that elevator is moving up, it's pushing you up and you have to break through that ceiling to get to the next level. And what happens is that ceiling was your resistance because you had to break through it. But once you get above that ceiling, it becomes your floor, and then you reach a new resistance level. When the elevator turns back around and it's coming down, that floor is your resistance, and the ceiling is what's pushing you down. So the concept isn't complicated, and if you just think of it as an elevator, so support becomes resistance when price breaks through it, and when price breaks through resistance, it becomes support. So it just depends on which way the price is moving. So as we can see in the top line up here, okay, this was supporting the price above where it currently is. Okay. But when we go back here a little bit, we can see that was the resistance level here. Now, these were levels that I drew on the charts back a while ago. Now, the euro is trading down here, 112 thereabouts, where you see it right here. And I didn't have a resistance level on there, so I had to go back historically, because you can see in the short term that the euro hasn't been anywhere near this price level in quite some time. So I had to go back farther and farther in my charts to find previous when the euro had been at this level before and what happened or what level or what exact price was important historically. Okay, so I had to go all the way back in my historic charts to find this. So and I had to go pretty far back till I could find a level. Okay, so we went back all the way to November to find when the euro was trading at this level last, to find these strategically important levels. And look at these levels, how important this price was. The top gold price, the 112,975, and the bottom level, the 112,668. Now we bring these forward, and look again how important, as price came down, it went right through and came all the way down here to almost at the 112,668, the gold line, bounced off of there and moved back up to the above the 112, the other gold line, came up to the blue line that we had drawn on recently, okay, and bounced off of there. And now it's sitting right on that long-term gold line. Okay. So the nice thing about what I call eyeballing is that you have to work with the charts. You have to be aware of where price is and what price is done. And the more, I'm a firm believer, the more time you spend touching a chart and looking at price action charts, the more you're improving, the better trader you become. So let me share a presentation with you. And that will help explain this or show it to you a little bit better. And then we'll go on from here. And we're going to show you how you might use highs and lows in an easy fashion to isolate them and build your support and resistance levels. So as you can see, getting these on your charts it's not time consuming. It takes a little bit of work, but the fact is that once you have them on your charts, they just stay moving forward. So as long as price is moving within that range, those are valid support and resistance lines. Then what we want to do is isolate them around and focus on, like you see on this chart, the levels or the zones that are directly around the current price action. And if you notice on here, we have our resistance 1 and resistance 2, and we have our major support line. That major support line came across from historical data from way before, and that is a critical price for, in this case, Bitcoin, because the lowest it's been in a very long time was 30.88. Okay, so that becomes a major support because at that level, people are going to start buying because it's a very cheap price for Bitcoin. So we can expect that major, and that's what we differentiate between majors and minors. And then we also have first, second, and third level of support and resistance. So imagine, again, the elevator. This is the floor above and below your feet. The major support level is a floor the elevator always stopped at. Say, the elevator's going up and down in the building, and there's a big restaurant on floor number 3, and everybody's going to that restaurant. So the elevator stops at 3 all the time. So 3 would be your major support level. Okay. And once we've isolated these on our charts, we can then, depends on what strategy you're using, at least at this point, you can make some sense out of price action. Whether you're trading with all kinds of indicators or whether you're just trading, if you're trading Apple because earnings reports came out for Apple, and then Cook came out and said some marvelous things that their sales are way up and everything is going incredibly great, and you expect Apple to rally. Okay, so you're going to buy Apple. But at what point do you want to monitor that rally that you might think that it's going to stop or slow down, or you might want to get out of the market? So when it's coming up through its major support level and moving up to that resistance level 1, okay, maybe you want to put that as where you want to exit the market. Or maybe it's already getting near resistance level 1 or your next resistance level. And as it approaches that level, you say, okay, I want to buy because I know Apple's very, very strong as earnings, but you don't want to buy it at a resistance level. You want to wait and see if it can break through that resistance level, especially when it breaks through and then bounces back below it and then forms the momentum to move back up. That's a very good point in which to buy. But you don't want to just enter the market as it's getting to that resistance level because it may peter out and not be able to get through there. So these levels help you make your trading decisions. Also, if you're in the market and the asset isn't doing as well as it is, not as strong as you thought it was going to be, well, maybe when it's approaching that resistance level, you say, you know what? I'm going to get out of the market. Or you might use your support level to set your stop loss. Okay, we have a major support level. We bought it when it bounced, when it was higher than that. But if it falls down to that support level, is going to hold up that price. So I'll put my stop loss slightly below that support level. So there's lots of ways that we can use these in our trading. There's also many different ways we can get these levels. Eyeballing is just one. Another way to get these is what we call pivot points. Pivot points are mathematical calculations that will give us the levels above and below the current price, and it will give us 3 levels of support and 3 levels of resistance. So it gives us 6 floors in total. And we can put these on our charts. And I'm only going to do support 1 and resistance 1 because we don't have enough time to do all these. But you want to make sure the calculations are based on the same time frame that we're looking at on our chart. And on the euro US dollar, the support level is at 112.99, and the resistance level is at 113.05. And these are constantly changing and being updated as the asset moves. So let's go back over to my euro US dollar, and we're going to put this 112.99 on our chart. So we're going to locate 112.99. And so we have one, and the other one is at 113.05. So now we have two more levels that we got from different pieces of information. So what we can do is we can then combine these with our eyeballing to get a better alert zone or a price zone that we should be aware of. Okay. We can also put on our dynamic support and resistance by dropping on moving average. On our chart. So we're going to let's make that moving average. We'll use a 10-period moving average. And let's make that, let's make it purple. Okay. So we then have our moving average line, which will help give us support and resistance lines. These support and resistance lines are when moving average crosses price. So as you can see, the purple line we just is just underneath the most recent candle, that green candle. That point would be a support line because it held price above that moving average. When it broke below the moving average over here, when we have the red candle, okay, see how price supported it right here? Okay, here and here. So that gives us other support and resistance zones. Then, of course, we also have Fibonacci levels, which we would draw on our chart. So there's many different ways, and the more different types of support and resistance zones, the more levels you get, the more valid they are, because you'll find a lot of them are right on top of each other. And that helps support that level. So it's important that you understand these, but you don't need to use all the levels. Okay, so again, let me share a little bit of a presentation showing you how you would get these in other methods to put them on your charts. Now, there's many ways that you can employ support and resistance, but I'm going to give you a couple tips of what to watch for. So the first thing we do is we want to watch for breakouts. So as we noted, price can and do cross their support and resistance level on the way to forming new trend lines. Use the current levels as guides, but realize that they will change over time. Think of changes as opportunities to make profit. When charting the price action of an asset, expect to see at least 2 bounces before considering a given high or low to be a resistance or support level. Preferably, you want to see 3 bounces since each one strengthens the signal. Asset prices tend to test support and resistance levels without breaking through them. You'll likely become nervous when this happens. It's normal. Calm your nerves and learn to trust your charts. When a breakout occurs, it usually does so in the context of forming a new price trend. Your chart should give you a heads up about that in advance. Now, don't get lazy with your charts. The more you trade a particular asset, the more you'll feel as if you know how its price will move. Be warned that assets have a surprisingly easy way of messing up experienced traders. Intuition is important. If any of the above concepts seem complex and confusing, don't worry. With time, you'll find that they are actually simple to understand and apply. Most of the complexity is due to a lack of familiarity. Now, remember, these are not just random numbers. Too many people just look at a chart and draw a number on it. They aren't. And the more adept you come at finding the support and resistance levels, the more you'll be able to successful with your trading. Resistance is not just some random area where price turns around. There are potential sellers, traders who have sold a currency pair or an asset once before. Remember the collective power that they had to push the price lower. There are also buyers who went long at support levels and were disappointed that the price did not go higher and will close their positions with sell orders at or just before price gets to that resistance ceiling. So they're the ones that are creating the ups and downs, the peaks and the valleys. Now, another group that makes up resistance are the ones who bought at or near resistance and are trapped when price fell at resistance. So in other words, price was moving up to the resistance level and buyers bought at that level because they thought it was going to break through, and it didn't. It bounced back down and the buyers are trapped. So they want to get out of their positions. So they're the ones that are going to be dumping the asset. So they're creating the supply. Okay. Now, if you think about how price moves and you understand trends and the peaks and the valleys of price movement, okay, you'll understand where these support levels come from and how to use them to buy. Because what happens is, as an asset is moving up, and the reverse holds true for moving down, but as price is moving up, it takes a lot of work to continue pushing price up. At some point, the buyers get tired and some will start moving to the sidelines. Other buyers saying, you know what, that price has gotten too high. I'm not going to buy at this price. I'm going to wait for it to get a little bit lower. And they move to the sidelines. And what happens is there's not enough momentum to keep pushing that price up. And there's also traders who bought down here who set their limit order or get out of the market order here because they made the profit they were looking for. Okay. And so the price starts easing back down. When it eases back down, it usually eases to the support level. And at that level, the buyers that move to the sidelines start re-entering the market and they start pushing that price back up. And it'll hit the next resistance level, again, where the buyers start saying, we're moving to the sideline, that price is too high. Or with this buyer who entered down here said, okay, I'm going to let it ride, but at this level, I'm going to sell to take my profit. And again, it comes back down to its support level, bounces off of there, and continues its rally. Because what you're looking at here is a beautiful, well-defined uptrend. And this is how price should move. So remember, my favorite is always eyeballing. Because technical analysis is not an exact science, it is useful to create support and resistance zones like we showed you in the presentation. Each security has its own characteristics, and analysis should reflect the intricacies of that asset. Sometimes exact support and resistance levels are best, and sometimes the zones work better. Generally, the tighter the range and the more exact the level. If the trading range spans less than 2 months and the price is relatively tight, then the more exact support and resistance levels are best suited. But this is only meant as a general guideline and each trading range should be judged on its own merits. Identification of key support and resistance levels is an essential ingredient in successful technical analysis. Now, I'm going to pop up with you a presentation that actually shows a strategy of how to trade or use support and resistance in a simple strategy to add it into your trading. And just look at the text on the bottom. This is pretty short, and it's just going to show you a couple charts with the notes on the bottom. And if you want to see this again, you can see it at that link I gave you earlier. So it's very easy to incorporate support and resistance into your trading, but understanding the concept of support and resistance, trading ranges, breakouts, and breakdowns can be quite valuable to all traders. Support and resistance is one of the strongest and most dependable tools available to a trader. Remember, it's best to use any tool along with other indicators when deciding whether or when to take and exit a position. Support and resistance analysis is an important part of trends because it can be useful in making trading decisions and identifying when a trend is reversing. For example, if a trader identifies an important level of resistance that has been tested several times but never broken, he or she may decide to take profit at that price and move as when price moves to that point, but is unlikely that it will move past that level. Now, often we have psych levels, okay? And these are well known. We know the euro at 106. We know Bitcoin at $19,000. We know Bitcoin at $3,000. Okay, are important site levels. We know gold at 1,200, gold at 1,000, gold at 1,100 are important levels. They're psychological levels. Plus, we know any asset, especially currencies, that when we put 00 at the end or 0.25, because many traders are setting these as stop loss points or take profit points, and they don't calculate all the way out to the 4 decimal point. So when somebody says, especially all the newbie traders, when they set their stop loss point or their take profit point, they just round it out and they say, I'm going to sell when the euro gets to 113.50. Instead of when they actually did their evaluation, they should have been selling at 113.47. And so what happens is lots of people react to these whole numbers. Oil, they don't say oil at 52.47 everybody's talking about oil at 52.50. So these can be critically important support and resistance prices also. And so we also talked about pivot points, and I showed you how to get them on your charts. So most experienced traders will be able to tell you many stories about a certain price level tend to prevent traders from pushing the price of an underlying asset in a certain direction. Determining future levels of support can drastically improve the returns of a short-term investing strategy because it gives traders an accurate picture of what price levels should prop up the price of a given security in the event of a correction. Conversely, foreseeing a level of resistance can be advantageous because this is the price level that could potentially harm a long position because it signifies an area where investors have a high willingness to sell the security. So as mentioned above, there are several different methods to choose when looking to identify support and resistance, but regardless of the method, the interpretation remains the same. It prevents the price of an underlying asset from moving in a certain direction. So remember some of the rules. Verify support and resistance. Okay. Look at trends. Support and resistance often acts as decisive trend changers. When an existing trend line meets a resistance, be prepared for a dynamic shift. 2, places change. Remember, when price is moving up, that level can be a support level, but when prices break through it, it becomes a resistance level. And the more often a trend line is tested, okay, or a support or resistance level is tested, the more valid it becomes. So you can see on this chart, historically, we found that this price of 32.50 was crucially important over a long period of time, whether it was a resistance or a support level. So we know that price of that asset, depending on which way it's going, is crucially important to the markets. And then the last thing we want to look at when price is reaching a support or resistance level is volume. Volume will help tell you what the traders are getting prepared to do at that level. And also time matters. When these support and resistance levels held more recently, they become more important. When you have to go back in long term because the price hasn't been there for a long time, or this price was pulled from the historic prices forward, it has less validity. The more recent that support level was put on your chart, and the more it's reacted to that level is important. But you know, when the euro gets down as low as it's going again, it hasn't been there much in many years. Okay. When the euro hit 105 and 106, so several months ago, that was a new price for the euro for like 15 years. When Bitcoin was rising and as Bitcoin was going up and up and up to 10,000, 11,000, 12,000, it had never traded those prices. So there was nothing we could do. When it was coming back down, the only thing we had were the short-term support levels and resistance levels because it had never been in those price areas before. So in conclusion, support and resistance levels are key mile markers in a security's progress. Whenever you're developing trading strategies, consider these points on a graph. Doing so will help set profit targets and prevent frustrations when eventual reversals do occur. So please click on the download buttons and download those 2 handouts I gave you. Keep that link I gave you. And if you want to come see this class again, use the link you used to come to tonight's class. Thank you very much for joining us, and I hope you learned a little bit about support and resistance. Have a good night, and if you have any questions, go to www.tradetime.com, click over to their education section, and you'll see lots of information on support and resistance. Good night, man.